This is not financial advice. I'm not an expert, and nothing here should be taken as a recommendation to buy or sell anything.
Today, I want to jump straight into a story that sits right at the intersection of crypto and sports. Recently, there was news circulating that Tether, the company behind USDT, the world's largest stablecoin, had shown interest in acquiring Juventus Football Club. Juventus is one of the most iconic football teams in Italy, and really in the world. The club has a long history and has been closely tied to the Agnelli family for decades through their holding company, Exor. Not long after that news surfaced, Exor made its position clear: Juventus isn't for sale. On the surface, this might sound like a simple, uneventful story. A company shows interest, the owners say no, and everyone moves on. But when you look at it more closely, it actually reveals something important about how certain crypto companies are thinking about their future and their place in the real world. Because buying a football club like Juventus isn't really about financial returns, at least not in the short term. Football clubs are expensive, emotional, and notoriously hard to run as clean investments. This isn't the kind of move you make if you're only thinking about balance sheets. What this is really about is visibility. Owning a club like Juventus would put Tether's name in front of millions of people globally. Every match, every broadcast, every highlight, every social media post becomes a form of exposure. And that kind of presence is very different from traditional advertising. You're not just buying attention, you're embedding yourself into something people already care deeply about. In that sense, buying a football club is the ultimate branding move. It's sponsorship taken to the extreme. Instead of putting your logo on a jersey or a stadium wall, you own the entire platform. So when I ask, why would Tether even want Juventus? I don't think the answer is profit. I see it as a move to push crypto further into everyday life, to make it feel familiar, to make it part of conversations that have nothing to do with blockchains, wallets, or trading. It's essentially saying, we're not just a financial tool sitting on an exchange, we're part of global culture. Now, this approach stands in sharp contrast to how I see another major stablecoin issuer, Circle, the company behind USDC. From my perspective, Circle has taken a much more traditional financial route. Instead of chasing visibility and cultural presence, they focus heavily on compliance, transparency, and integration with existing financial systems. Their messaging and strategy feel much closer to how banks, payment networks, and regulated financial institutions operate. In my opinion, Circle's long-term direction looks less like a flashy crypto brand and more like a digital financial institution operating quietly in the background. Something that prioritizes trust, infrastructure, and regulatory alignment over being seen everywhere. It's a very different philosophy, and it sets up an interesting contrast between two companies that, on the surface, are both just issuing stablecoins. Let's think about this Juventus bid in practical terms. If Tether had actually succeeded, what would they really gain? Owning a football club doesn't suddenly create new revenue streams for a stablecoin issuer. Juventus already has a well-established business model: ticket sales, broadcasting rights, merchandise, sponsorships. That machine is already running, and it's not something Tether could or would fundamentally change overnight. The real value here isn't operational, it's visibility. Every time Juventus plays, millions of fans around the world are watching. And if Tether were tied to that club, their name would be part of that experience, week after week. That's global exposure on a scale most companies can't replicate with traditional advertising. And more importantly, it doesn't feel like an ad. It feels permanent, cultural, embedded. That's why I see this move much less as a financial investment and much more as a branding exercise. It's Tether signaling, we're not just a crypto company, we belong in the mainstream. In that sense, buying a football club is like buying the most powerful ad space possible. You're associating crypto with something people already love, follow, and emotionally connect with: sports. This kind of move makes even more sense when you think about Tether's reputation. Despite being the largest stablecoin by market share, Tether has long faced questions around transparency and regulation. A bold, high-profile move like this could help reshape how the public sees them, not as something abstract or distant, but as a recognizable, everyday brand. Now, when I compare this to Circle, the difference in strategy becomes very clear. Circle isn't trying to win people over through sports, sponsorships, or cultural presence. Instead, they're focused on infrastructure. From what I can see, they're putting their energy into working with regulators, banks, and payment networks, basically making USDC something institutions feel comfortable touching. If Tether is chasing public attention, Circle is chasing institutional trust. And those are two very different goals. From my perspective, Circle's long-term path looks a lot closer to traditional finance. They emphasize compliance, they integrate with existing payment systems, and the way they position themselves feels less like a consumer-facing crypto brand and more like financial plumbing. When I think about companies like Visa or MasterCard, their power doesn't come from hype or visibility. It comes from being the backbone of global payments. In my opinion, Circle seems to be aiming for something similar, positioning USDC as a core layer for digital payments in the future. So, to put it simply, I see it this way. Tether is chasing cultural relevance, while Circle is chasing institutional credibility. Both strategies make sense. Both have upside, but they're fundamentally different. Tether's interest in Juventus shows just how far they're willing to go to insert themselves into mainstream culture. Circle, on the other hand, appears to be playing a longer, quieter game-building systems that over time could sit alongside or even compete with traditional financial institutions. When we look ahead, the big question becomes this: which of these strategies actually holds up in the long run? Right now, Tether clearly has the advantage in scale. It's the most widely used stablecoin in the market, deeply embedded across exchanges and crypto platforms, and for many traders, it's simply the default option. That kind of dominance is powerful, and it's not easy to displace. But the challenge for Tether, at least in my view, is sustainability. As governments and regulators start paying closer attention to stablecoins, issues around transparency, oversight, and compliance are likely to matter more and more. If stricter rules come into play, Tether's existing model could face real pressure. Being big helps, but being big also makes you a very obvious target when regulation tightens. Circle sits on the opposite end of that spectrum. They've built their entire identity around compliance and transparency. They regularly publish attestations, they emphasize regulatory alignment, and they're very clear about how USDC is backed. This approach might not lead to explosive growth in the short term, but it does position them well for a future where stablecoins are more tightly integrated into traditional finance. From my perspective, if stablecoins end up being widely adopted by banks, payment networks, or other regulated financial institutions, Circle already fits that world. Their strategy feels designed for a future where crypto doesn't sit on the fringe anymore, it sits inside the existing financial system. So when I compare the two, I see a clear philosophical split. Tether wants to be everywhere. Visible, familiar, part of culture and daily life. Circle wants to be trusted, reliable, quietly powering systems behind the scenes. Both paths come with risks. Tether risks running into serious friction if regulation becomes the dominant force shaping the stablecoin market. Circle risks being overshadowed if its slower, compliance-heavy approach doesn't capture enough momentum or market share quickly enough. Ultimately, I think the future of stablecoins depends less on technology and more on how governments and financial systems choose to engage with them. If regulation becomes the defining factor, Circle could be in a stronger position. If adoption continues to be driven primarily by crypto traders and cultural relevance, Tether may be able to maintain its dominance. And that's why the Juventus bid matters so much, even though it never went anywhere. To me, it's symbolic. It shows that Tether isn't just thinking about crypto markets, it's thinking about mainstream culture. Circle, meanwhile, is focused on mainstream finance. Two very different visions, two very different strategies, and both are trying in their own way to shape what the future of money looks like. So what does all of this actually mean for the broader crypto industry? Moves like Tether's interest in Juventus show that stablecoin issuers are no longer satisfied with staying in the background of financial markets. They want to be visible. They want to be recognizable, and they want to be part of everyday life. Whether or not the deal ever had a real chance of happening, the message behind it is clear. Crypto companies are thinking far beyond exchanges and wallets. They're looking for ways to embed themselves into the fabric of society through sports, entertainment, and other cultural spaces people already engage with. The goal isn't just usage anymore, it's familiarity. At the same time, Circle's approach is a reminder that visibility alone isn't enough. If stablecoins are ever going to be used at scale by banks, governments, or large corporations, trust and regulation matter just as much as adoption. Stablecoins will need to operate inside systems that feel safe, predictable, and reliable. That's where Circle is placing its focus, and in my view, that's a very deliberate bet on how this space matures. In many ways, this contrast between Tether and Circle mirrors a bigger tension within crypto itself. On one side, there's the push to make crypto part of everyday culture, to normalize it, to make it familiar, to make it something people interact with without thinking twice. On the other side, there's the push to integrate crypto into the existing financial system to make it compliant, trusted, and compatible with how money already moves today. For listeners, the takeaway is pretty simple. These moves matter because they show us how the biggest players in the stablecoin space are trying to shape the future. Tether's interest in Juventus might seem unusual at first, but at its core, it's about brand building and mainstream adoption. Circle's infrastructure-focused strategy may be less flashy, but it's about laying the groundwork for long-term stability. Both paths are important, and together they highlight the different directions crypto can evolve. Because in the end, the stablecoin race isn't just about digital dollars. It's about who gets to define what money looks like in the future and how deeply it becomes part of everyday life.